It's Brian Preston, the Money Guy.
Okay, let's talk about being in your 40s. PokerStar75 says that he and his wife they have a net worth of $3 million plus. So, they're hitting that phase of life where they're starting to think about what's next. He is in his mid 40s. Their teenage kids' college accounts are funded. So that's their situation. Should we look into long-term care insurance? What should we look for when looking for a policy? And what do you guys think about, is this a good next, backstop to put in place for where he is in life?
So for those of you that don't know, long-term care insurance is exactly what it sounds like. It is an insurance that you could pay for now that should you at some point in the future need nursing home care, skilled nursing care, some sort of advanced care in order to provide for you, then the insurance policy will pay to help cover the costs of those. And they're structured a number of different ways, a number of different benefits, number of different benefit periods, but that's really what it is. If you think that you're going to need help later in life, you buy a long-term care insurance policy to help pay benefits to cover those costs. So the question that he's asking is, hey, should I do that? Or when do I do it? Or how do I know if it makes sense, especially if I'm in a really good financial situation?
Yeah, I think I love, this is one of those, maximizing, and that's what I love about what we do as Financial Mutants, is we kind of help you. It's not just to get by with the minimum, it's actually to help you maximize both from what happens financially, but also from a peace of mind situation. Mm-hmm. And I think about just, and look, PokerStar, we don't sell insurance, but I'm going to give you some thoughts over my 20 plus year financial planning. Back, what was it, a decade, 15 years ago, everybody and their brother was trying to sell long-term care. You had a gazillion insurance companies, and the problem is they were all rushing to get to market because we all knew this whole graying of the United States.
Living longer.
Everybody's living longer. There's going to be great opportunity here. So everybody got into that marketplace, but I got to tell you, it's been somewhat of a little bit of I was going to say disaster, but I have to be careful how we structure it, because what I've seen is all the policies from that era, they've had to come back, and because there's always a little asterisk when you sign these policies, where they get to go to the insurance commissioner and they can ask where they can raise rates on everybody who's in that contract. So we've seen that for a lot of our clients, is that, all of a sudden the premiums have gone up on everybody.
And they can go up substantially.
But look, the industry's tried to recalibrate, because there used to be a gazillion people in this space, and they mispriced it. Now, if you look at the long-term care space, there's very few. There's a much smaller group of providers. But they've actually tried to do a better job of underwriting and figuring out what the true cost of this is. But what I've seen when I've looked at policies recently is that instead of giving you these blanket lifetime benefits, they've now tried to compress down to where it's like a 5-year benefit, if you really did need it. So I'm giving you enough here so you can figure out, but this is what I tell clients. You have to really analyze yourself and say, what is the purpose of this insurance? Because I know an insurance broker who's super successful. He doesn't have long-term care on himself. But then I have other clients, and I might fall into this category, is that, if you have created tremendous success for yourself financially, and now you're just trying to make sure it's not about building wealth, it's about keeping your wealth. You might say, hey, I would get a lot of peace of mind. I know I'm paying a premium for this, but I get a lot of peace of mind because that's one more thing I can check the box off of and know I don't ever have to worry about that for my family. There is some value in that. And that's what I've tried to walk with clients to figure out. What's the cost versus the benefit? And a lot of this benefit is do you get to keep your wealth? And we used to talk about the donut method with long-term care, and the fact that if you were your liquid investments were worth less than $1 million, more than likely you're pretty close to the social safety net. If you're worth over $3 million, which, by the way, and maybe that's indexed where we need to say it's higher than $3 million, but in the past it was $3 million. You're kind of at that self-insure stage of life. So really long-term care in the past was for those people, because it's not cheap, who were between that 1 to 3 million, who were looking to protect what they had built, but it wasn't so big that they could self-insure yet. Maybe that number has been expanded out a little bit because things are expensive, but I think you have to balance that with, hey, the benefits typically now are within 5 years. Well, that lends itself more to self-insuring. So what I'll bring it back to is analyze within yourself what's the why on this. And then I don't know if this still holds up, Bo, but in the past it was in your early 50s was the kind of an ideal time to do the underwriting. You actually did insurance, so maybe I'll let you kind of talk about that.
The products have changed a little bit. They used to have annual premiums that you pay. Now they even have products where you can do a single premium where you just put a pot of money in there and it covers you. One of the things I think that you didn't mention that I would think about is look at your family genealogy, right?
Yeah.
When you look at the lives of your parents, grandparents, aunts, uncles, what does end of life commonly look like? Is it, a massive cardiac event and that's it? Or do you have instances of dementia, Alzheimer's, that sort of thing that might lend itself to needing this kind of care? So that's one of the decisions you make around whether, okay, yes, it seems likely I should buy this high probability or not likely. I love that you talked about being self-insured because if PokerStar in their 40s is worth like $3 million, and we know that like every 7 years your money can double, then like by his 50s, he's approaching like $6 million if he's not saving anymore. And then by his 60s, he's approaching like $12 million. There's a really good chance based on your standard of living, based on your lifestyle, even if you go factor in the cost of end-of-life care, the cost of nursing home care, the cost of skilled nursing, you'll still be self-insured. This is one of the things that's really, really hard to do in generality. So I would encourage you, PokerStar, if this is something you're seriously considering, this might be one of those times where it makes sense to think about taking the relationship to the next level. Because the answer to should you buy this is no longer rule of thumb. It's more about your unique and your specific situation to determine, does this solve some problem that I have? Does this fit into the overall financial plan that I need? And is now the right time to do it? Or is it something that happens in my early 50s, in my mid 50s? So it might not be a horrible time to think about taking the relationship to the next level.
And I don't want to belabor this, but I think it's so interesting how creative the financial marketplace is because there's also new products on the scene that I know we've looked at for some clients where they are long-term care, but it's structured with these communities where you buy or structured as, I don't know if you want to call it you're leasing or you're buying, because it's an all-in-one package where you're essentially buying into this community where you live in this community and there's different price points depending on what you're getting. But then it's a one-time what you pay in, and then you have some annual maintenance. But it's all tied in.
It's like a country club for later in life.
Yeah, but it's already built into the agreement that as you go from independent living to assisted living to full on, you've got somebody where you're in an actual like hospice or something like that. It's all built into the structure of these things. There's all these new creative things that are coming on the scene that you just want to make sure that you're coordinating all those things. That's right. Because you'd feel bad if this is where you wanted to go, but you're locked in with this. So just make sure. That's why I do like the thought of it might make sense, because I tell you all the time, you can try to keep your life as simple as possible, but success creates complexity. This is one of those things where taking the relationship to the next level might add just another person who's been there, done that. I mean, I love that we actually have one of our planners. He comes from a public accounting background, but he also comes from a background where this is the type of communities that he was working on, how they structure those deals. And that's priceless, because you're doing this for the first time ever and you're trying not to screw it up. Why not talk to somebody who's done this a bunch of times so that you actually know what to look for and what's coming your way, so you don't get blindsided by it. But these are heavy decisions that you just need to make sure you're measuring twice on, cutting once, and doing it right.